This is Dance Studio 411, where we answer your real-life questions about your toughest studio life predicaments. Parent problems, teacher turnover, student challenges, policy dilemmas, and so much more. Let's talk about what's keeping you awake at night and what you can do about it. Here are your hosts, Suzanne Blake Garrity and Jill Tyrone.
Welcome, everyone, to this episode of our Dance Studio 411 podcast. We are joined by our special guest today, Jessica from Financial Groove. She is not only a longtime contributor, but she is my go-to expert on all things related to, the financial side of the studio. And especially during this time, Jessica has been especially, wise and calm through the COVID storm of all of the things we've dealt with, PPP loans, and now we're going to talk about PPP forgiveness. So thanks for being here, Jessica.
Yeah, thank you so much for having me. I'm so glad we're able to get this information out to people. There's so much information out there that, suddenly everyone's having to comb through congressional laws and trying to figure out what's right and what's wrong. And I've also learned about what clickbait is on YouTube, according to PPP projections and things like that. So we really want to make sure that all of your listeners are able to kind of cut through what applies to you and what matters to you.
Exactly. Well, and that's why it's so wonderful that you're taking time out of your day today. I think that's the best place to start, right? We're dance studio owners and teachers and artists and, creatives. On a good day, documentation is the least favorite thing for us to do. So I know that you work with so many different clients, different studio sizes, I'm sure, and they're based all over the country. And so I always do want to recommend, and we're going to include in the show notes, links to your great resources, your Facebook group, and you have a wonderful visual aid that we're going to talk about. So if you're listening to this podcast, make sure you check out the wonderful diagram Jessica is going to talk about. But most importantly, check with your trusted financial person, your accountant, your CPA. That's my disclaimer. But, let's start off with the PPP loan. If you're lucky enough to have received some financial support through this time, now we're faced with the reckoning day of this forgiveness part. So I'm going to let you kind of start off with, what are studio owners feeling right now and what are you noticing?
Well, now that we've gotten into the fall and all of our projections are coming true or not coming true for what's happening in your studio, I think a lot of people are realizing the rubber is really meeting the road. So the PPP loan and the loans that we were really focused on and spending all of our time on at the same as doing virtual classes in spring and summer, that got us through because you didn't have your recital to get you through the summer. So these programs that on the back end here, we're trying to get forgiveness for and whatnot, that got us through. And so now at this point in the year that you're back to fall and we have some reality in your enrollment numbers and what you're planning on doing with competitions or changing around costuming, and things like that. Now that we're at that point, it really becomes a matter of putting your financial leadership hat on and your business owner hat on. I do believe that eventually we will get some additional assistance from the government. Having been through the first round, it's going to probably feel like cake to us. We know how to do this now, exactly. But it's going to be a combination of both. So I know it just keeps barreling forward.
Right. And what you're noticing, and I'm sure that I know what many of our members are reporting, and even myself as someone who's been through the PPP process, both for the studio and my husband's self-employed business, every bank is different in their communication. And so it can feel a little scary. And you led with a great tip on that. So I'm going to let you start there, because the bank is legit. And so how do we, sort all of that out?
Yeah, absolutely. So what we are seeing is that every single bank is approaching the PPP forgiveness differently, the same way that you probably discovered they approach the application process differently. They ask for different things. On the forgiveness side, they're asking for different things. What you want to keep in mind with the bank is that at the end of the day, they're all held to the SBA and Treasury guidelines that exist from SBA application and guidelines and instructions and all of that. At the end of the day, they're all held to that. So when they're asking you for suddenly for things that you weren't expecting or are not on the SBA list, which we'll get into a little bit, when they're asking for those things, they're doing that because they're trying to help themselves or leverage their own liabilities, because to be honest, they're worried about having all of these millions of loans on the news, they would say, on their balance sheet. So basically just the fact that they have to manage all these many loans. And so where we're at right now, and why it's also so extra confusing, and I'm going to get to this point, the banks are kind of fighting with Congress or with Treasury. They're like, we stuck our neck out here, our money is out there, and they need the SBA to cover their money. So they're trying to extra cover their butts, is really, to be quite frank.
Yes. Well,
so
and that's
of the
what's
major
so confusing, right? It's so confusing.
Yeah, so confusing. So what we are encouraging people to do, and one of the major things you can reference on this timeline visual that we'll have posted for you, is the timing of when you should and need to do your forgiveness applications. So right now, what you're probably experiencing, or some of you, is your bank almost like knocking at your door, being like, do this, do this, do this. And we're actually recommending patience, because we don't want you to be the guinea pig. The first wave of loans that apply for forgiveness, the banks are doing all sorts of things at the same time while they are arguing with SBA and Treasury. You do not want to be in that wave. And
right.
so
let somebody else go first.
We want to be in the middle. We want to be in the middle.
That's a good tip.
Once they figured things out.
Yeah. Well, and like you said, if anyone listening to this, I mean, I feel like I earned a badge for what we survived in the application process for all those rounds. So yeah, so that's a great tip. Have patience. Of course, the banks want you to come and be their guinea pig, but let's let someone else go first. And frankly, most of the listeners of our podcast, and I'm guessing most dance studios, I do want to talk a little bit about the size of loan, because I think there's some confusion on, some people have said, well, if it's under a certain amount, it's just going to be automatically forgiven. I mean, do you have any insight on that?
Yeah, absolutely. So what's happened over time is the SBA has released 3 different types of applications. One, which is the 3508 EZ, and that is strictly for self-employed people who do not have payroll of any kind, so who are not paying other employees.
Got it.
And then just recently, they released the 3508S, which is for loans that are under 50,000. And they made it sound, and this is where it gets confusing, they made it sound like that gave you some sort of automatic forgiveness. That's not true. And on any of these, you still have to do all the math, even though they made it only 1 page. So they reduced down the pages you have to fill out, but the original instructions that we had, probably 6 months ago, still stand on how you calculate. So they made it look shiny and pretty with a package, but it's all still the same math. Okay. So I would just want to really push that forward, especially with this new 3508S. You want to make sure that your numbers are correct, because after you fill out this simple 1-page application, you still have to submit 10 backup documents that show all that information and math.
Wow. Okay. But so before we get anybody ultra worried, we're going to talk about where you go find that form. And then also, you're so great at helping dance studio owner clients manage the monthly, the minutia of what has to be produced. I mean, at this point in time, are we looking at our profit and loss statement? Or are we just looking at our QuickBooks? Like, what are we looking for documentation?
Sure. There's, let me say it this way, and actually maybe this is something I can send over to you. We've kind of created a checklist.
Oh, cool.
Ultimately, the application instructions are very confusing as to what you need to upload or produce, but you're basically looking at the payroll reports for the payroll that you ran during your covered period. So if you're 8 weeks, during those 8 weeks, if you're 24 weeks, during those 24 weeks. They could also potentially ask you for your quarterly payroll filings, which you would get from your payroll company. So that's going to be your 941 and your state unemployment. And that just backs up the information that's on your payroll reports. So those are the three major items for the payroll that are used in the calculation of the application. So that's our payroll. If you remember, we had to have 60% payroll stuff and 40% we were allowed to have as other expenses. So it's funny, but the other expenses is where all the paperwork, in my opinion, is coming from, because they want copies of all of your utility bills for all of the months.
Wow.
They want a copy of your lease for the studio. And then they also want copies of canceled checks. So now that we're in a complete digital age, that basically just means logging onto your bank account, clicking that little link that shows view check, and basically saving a PDF of that front and back of the check copy. So they're looking for that for either 6 months or 2 months, depending on if you're an 8-week or if you're a 24-week loan. Honestly,
yeah, so that's a lot of, but right there, that's already like everyone's like massaging their temples on their head and saying, oh no, this year can't get any more intense, because like as it is, we're working more hours than everybody. Listen, I hear you, I see you through the podcast. You're working harder than ever. So this is where we all need to take a collective like breath. And to your point, we don't need to rush to the bank's whim right away. There's time.
No, not at all. In fact, maybe we should go through this timeline at this point. So if you remember, because I'm constantly talking about, are you an 8-week loan or are you a 24-week loan? I'm just going to touch on that. If your loan was started or you received the funding before June 5th, you have the option of deciding, am I an 8-week covered period or am I a 24-week covered period? If your loan was originated after that, you're automatically 24 weeks. So no matter what, anyone who received this loan could use 24 weeks if you need it. So that's just something to keep in mind. They did that with the Flexibility Act that they passed, and it makes it a lot easier to get forgiveness in general. So when in doubt, you can go with the 24 weeks no matter what timeline you're on. Great. But ultimately, when what they call the covered period, that's that 24 weeks or the 8 weeks, either way, once that ends, you have time, you have a grace period to apply for forgiveness, which is 10 months from the ending date. So most people got their PPP loans, let's say they got them in May. That would make your covered period, we'll call it 8 weeks, that's 2 months. So we're in May, June. Mm-hmm. Plus 10 months.
Right.
We're in February.
Mm-hmm. Of this coming, right, circling till we don't have to worry about applying for forgiveness until at least February.
Right.
Okay.
And anyone who's doing the 24 weeks, that's 6 months. So 6 months from May plus another 10 months. That's 16 months. That's a year and 4 months from the time that you got that loan before your forgiveness needs to be in.
Great.
You have a lot of time to figure this out and work this out. And again, let other people be the guinea pig, no matter what your bank is saying.
Yes.
So that's the biggest thing I want to keep in people's minds. We do recommend sending in your forgiveness 2 months before that grace period ends. So while I just said you have 10 months, our recommendation is 8 months to give the bank time to work through the paperwork.
Yeah, and that should be good. And I know we're already we're recording this here in November. You know, this has been the year that has felt like 10, but like there's some things you can wrap up into, a lot of people do switch gears into wrapping up getting ready for the new tax season. Yeah. So the timing of this could be, I suppose, good. It's nice to know that we're not urgently having to get this in by the end of this calendar year. That helps me take a deep breath already, which is why I'm glad we're talking.
Yeah, absolutely. You certainly, at the same time that you're gathering receipts or putting together tax documents, that could be the moment where you finally remember your login to the internet company to be able to print those bills out. I know that's the hurdle for me, is what is that login?
Yes. Well, and I know, and this is such a great visual. And again, if you're listening, we're going to have this on the show notes page. I know you're probably going to get to it. I want to talk about the payment due dates. Where does that EIDL advance fit in? And maybe we put that in after we finish this, because I know there's been some confusion on that as well.
There's confusion, and that's one of the fights that the banks are having with Congress. All the original guidance says that if you receive the EIDL advance, it will be put into your PPP loan application. So that would mean that you get 100% forgiveness for your PPP loan because you did everything right. You still owe the $10,000 back, but you'll pay it to the bank, not to the SBA.
So the advance will not be forgiven.
Correct. That's what all original guidance says. And that's where the bank is arguing, because they don't want to have $1 million, $10,000 loans sitting on their books.
Right.
So again, there's another argument for patience and waiting, because we do believe that the banks are going to sort things out with Congress. We also know that, and this is where the other confusion comes in, Congress has been negotiating and talking about blanket forgiveness. More than likely, we're not going to see that for loans that are over $50,000, but they've definitely been discussing blanket forgiveness for loans $50,000 and below. So I'm suggesting that, we wait and we give Congress time to work that out for our smaller loans, because if you don't have to do the paperwork, don't do the paperwork.
Right. But be informed, which is why we love having you here. Good. So now carrying on with your wonderful chart. So we go through that grace period, like you said, recommending give yourself 2 actions. So instead if you do 10, back it up to 8 months. We've come to that point and you're submitting this to the bank. We're holding our breath. And then what?
Well, the bank is they are given 60 days to review the application. So that's why we're backing that up 2 months. So the bank has 60 days to request more information from you or make a determination in that way. So that's what's going to dictate whether or not you're making the cutoff for your grace period. From there, the bank is going to ask SBA to give them the money. So the bank says, everything looks good. Okay, here you go, SBA. And the SBA gets to say, yep, I agree, it looks good. And then the SBA gives the bank the money so that the bank doesn't have your money outstanding. And that basically gives you full forgiveness. If, for example, you have no forgiveness and you do have to start paying it back, say it comes back, or you knew it going in, which did happen, then that first payment is going to be due at the end of that 10-month period, even though we're still waiting for SBA to get back to us. Okay. So the first payment would be due at that time. If you remember, the loan was a 2-year loan from the day that you got the money. So there's a weird crossover. You probably want to get a calendar out and count months. Mm-hmm. But for example, we've been given 16 months in some cases to ask for forgiveness, but your payment then gives you 2 years being 24 months minus 16 months. That only gives us 8 months to pay back that loan if they do not forgive it.
Which is that could be a lot of money for people. And I don't even know what that's going to look like playing out. Let's not try to be a doomsday prepper today, but what that could mean is perhaps the bank would work with you to refinance that. I don't know, to make it be over longer terms, because that seems like a heavy amount of money to pay back on a short notice.
It definitely does, which that's another thing. If you will notice on the visual, mm-hmm. Our people who were in the first wave of the PPP loan are held to that 2 years. Anyone who received their PPP loan after June 5th, they have a 5-year timeline automatically. So my experience is that most people were in that first wave in the studio business. So that's what I'm focusing on. But keep in mind, if your loan was after June 5th, they've already extended that time period to pay it back.
Mm-hmm. And as all things 2020 and on, we just have to be subject to change, be flexible, because this, like you said, there's a chance, or fingers crossed for many small businesses, that there could be another wave of funding. So this is such a helpful visual, Jessica. I know that our listeners and our members will appreciate that. In terms of, we could talk about this for days.
Sure.
Given that you are a firm that works with so many studios, what's the one thing when we wrap this up that you want them to know as we keep forging ahead here? Like, what's the most important thing they could be doing now? I know we have access to them reaching out to you to get if you're listening to this and you're ready for some professional help, are you taking on new clients?
Yes, we are taking on new clients. We definitely are also taking on clients who are helping through the PPP loan and loan forgiveness process. We also offer bookkeeping with payroll services and tax services as well. At this point in the year, like Suzanne mentioned, if you want to think about getting your PPP loan documents together at the same time as you're getting your tax documents together, or really in a planning point of the year, you have a good idea of where your enrollment is sitting, so you can really plan for the push to the end of the year and what it's going to take to get you through to May of next year. So you can work with those numbers at this point in time, looking at the drops in enrollment and how that's affected your income, and find ways to cut expenses or fill in the gap of that income. Once you're working with the reality of that drop, some things that we forget about is last year, or 2019, I was sitting pretty, and ultimately my business was showing a huge profit. So having a drop in business does not necessarily mean that you're down and out and upside down. It feels like you're at a loss because you have lost income, but that doesn't mean that your business in general is at a loss. And I think we need to make sure that we remember that and stay positive with those numbers. When you're looking at the profit and loss report, that number at the bottom, if it is not a negative number, you're not at a loss. And from what I'm seeing, most people have not hit that loss point, but we want to look at the numbers here now that we know the shifts in enrollment and how that's affecting us, so that we can make sure that we make it through the next wave and plan accordingly. I did want to bring up one little thing with the PPP, which is the PPP loan will affect the calculation of your taxes. So with the clients I work with right now, we're working really hard simultaneously on projecting what their taxes will look like at the same time as working through cash flow issues for the next 6 months. So your tax projections that you're used to every year are just going to be completely crazy because we have loans and we have drops in income and all of that. So normally at the end of the year, I most often tell people to spend the money on their costumes this year. And I don't necessarily think that. Almost all the people I've looked at, let's wait to spend our money. Different paradigm.
Right. Like maybe hold on to that cash as long as you can. Yep. Right. And turn the corner.
Yeah, exactly.
Yeah. That's a good tip, Jessica. Well, I know cash is definitely where it's at right now. And you just have so much great advice. I love that you always bring a calm demeanor to it. As artists and business folks, you are one yourself, and I know you get that. So thank you so much for your time today. And I know that this episode will make a difference for our listeners, and we look forward to having you back again soon.
Great. Thank you so much. Good luck, everyone.
Thanks for listening to this episode of Dance Studio 411. Visit us online at dancestudio411.com for more great resources and to submit a question for a future episode. Our number one goal is to help you build a successful dance studio business and keep your passion for dance alive.